don't be fooled. I still think there's a chance for 12 to 13,000, maybe even 9,000. But again, that 30,500 level is the level I'm watching.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
Gareth, how are you reading these numbers? And more importantly, how do you think the Fed is reading these numbers?
Yeah, so I think the market, we see upside today, pretty solid upside too in the S&P 500, the NASDAQ 100's having a monster move. Part of that's on the back of the Meta earnings. Obviously, we had the earnings yesterday from Microsoft as well. So very good earnings news, as you had mentioned. But I think the lower GDP numbers are keeping the market and investors focused on the very near-term benefit of the Fed potentially not hiking or not hiking as much. And I caution the market. I caution investors when I see this, because ultimately what we know is that when GDP starts to slow down, we might actually turn negative, and it could dictate that recession is a looming indicator, or that we're likely headed towards recession in the second half. So I think the market itself is rejoicing, saying, okay, a weaker GDP number means, hey, the Fed may not have to hike as much, or maybe can be a little bit looser on their monetary policy. But I do caution that ultimately, if we spin into a recession, the Fed is not going to be able to lower interest rates much because inflation is still elevated.
Yeah, and we do have slowing growth, higher inflation, technically stagflation. So what are you expecting then from the Fed at this upcoming meeting? Do you think we'll still get a 25 basis point hike?
I do still think that. I think the Fed is still focused on not becoming the Paul Volcker of the 2020s, if you will, in terms of being too loose on monetary policy, maybe getting too dovish too quickly, and then letting inflation roar back. So I think we will see 25 basis points. But again, this should give investors concern, because if we're already seeing economic news, and again, we saw the jobs data a month ago or so starting to come in a little bit lighter than expected. Now GDP is showing a marketable decline from what was expected. You have to start saying, okay, is this an indicator that we are headed towards that recession the Fed's calling for in the second half? They're saying mild, and I think we talked about this before, but they said transitory, and look at what the outcome was. So I don't really trust them when they say mild for a recession. I think it's all about, does he finally announce a pause, right? Does he guide us? Does he guide the markets into thinking that, okay, if they're doing 25 basis points this time, are they finally going to be at rest at the new Fed funds rate? And I actually do think that that's a likely scenario. I think he's going to.
Do you think he'll telegraph that? He will actually say that?
I do think so. And I think the markets will probably initially rejoice at it until they start to think about, okay, if the Fed is pausing here, what does that mean economically? What is he seeing on the horizon? But I think initially the reaction is, investors are very much in the buy the dip mentality again. You can see it in crypto. You can see it in tech stocks. Every dip is being bought. We're floating back up. Then we get these big earnings. So I think the market will initially react positively to that. And then I think over the coming days and weeks, that's where the market starts to see some profit taking.
So as you said, if the Fed cuts, that may spur more market activity. There's often a disconnect between Wall Street and Main Street, but could we see that perhaps even amplified in the second half of this year? Or are you still convinced or forecasting that the market is in for a major heavy drop, big tank second half of the year?
Yeah, so I'm still in the camp that we're in for a very sharp decline in the markets. And the reason I say that is twofold. Number one is that it's almost going to be impossible for the Fed to loosen rates to the amount that will be needed to get massive amounts of money to flow back into the equity markets and push us to new all-time highs. So again, if we think about it like this, right, how much did Powell raise interest rates from the start of this hiking session or season? And ultimately, how much is the market up or down in that period? And yeah, we've kind of stabilized. We've inched up a little off those lows, but the NASDAQ and the S&P are still well off their all-time highs. So the question is, how does he come to the rescue of a market when inflation remains north of 3%, 4%, 5%? And even again, I still think inflation is going to continue to come down. I just don't see it getting back to 2% where he can marketably drop those interest rates back to the levels they were at pre-hiking process. And
could he be like 3% inflation is good enough? 3% becomes the new normal?
Well, moving goalposts is what the Fed does best, right? We know that. So yes, I think that eventually, right? So think about this. If they call for a mild recession and it turns out to be a very bad recession and we have 3% inflation, I would absolutely agree that at that point, the Fed will have to come out and hike rate or lower rates substantially. The question is, at that point, what is the discount in the stock market? I mean, if we see, again, a deep recession, what are the earnings looking like for companies like Apple? What about, Microsoft that just reported that was very good? But if we do get in that deep recession, where are those earnings? Where's that multiple for the S&P 500? This chart here and how accurate it is in falling. Remember what we just looked at. If I put an arrow in here, this is your next move in the market. The biggest move of the bear market is likely on the horizon.
And how big is that move, percentage-wise, of the S&P?
Yeah, I have a downside target for this year of 3,300 on the S&P. So that is pretty substantial considering we're almost getting towards the halfway point of the year. And I do think we get below 3,000 in 2024. So I am looking for significant downside. In fact, at this point in time, I'm actually almost at my most bearish point of this market cycle based on what I'm seeing in the markets, based on, and part of this is human psychology too. We're seeing this resumption of this kind of free spending environment where investors are willing to pay up for stocks, pay up for crypto, pay up for anything, ask questions later. That is not a healthy sign. It doesn't tell us the bottom's here. It tells us that we have another leg lower to go.
Jeff Kendrick says crypto winter is over. But what does Gareth Soloway say?
So for me, I'm not convinced yet that the winter is over yet. I think it's almost been too easy of a winter in respect to, yes, we've seen big declines, but we still have a massive amount of crypto coins out there that have no use case, no real reason to be in existence, and they're still in existence, and they're still getting pumped on a daily basis, right? In fact, recently, Pepe and all these other ones, it's just flooding the market and going up ridiculous amounts. So I'm a little concerned about that. To me, the 30,500 level continues to be the level on the charts that I'm keeping an eye on. So if we just take a look at the chart right here, right?
Yeah.
And we just kind of we can see that the Bitcoin chart ran up to that 30,500. It collapsed back on it, below it. We've now come back up a little bit because of the fear in the banking markets and so forth. But for me, this level is the key level, this 30,500 level. Can we get through that? If we do get through that, then I actually think the low is likely in on Bitcoin at 15,700. But again, I would just caution people at this point, you look at what Bitcoin has gone up and you look at the 2018 and 19 bear market, it had bigger rallies than this in percentage terms during that bear market, and people again seem to forget that. So don't be fooled. I've been through many bear markets in commodities, in the stock market, in crypto in my trading career, and sometimes it turns out to be the lipsticks on the pig here, and it could still roll over and head lower. So I still think there's a chance for 12 to 13,000, maybe even 9,000. But again, that 30,500 level is the level I'm watching. So
break that down, because as you said, you do feel that it could drop to 15,000, even 12,000.
Yep.
Is that if it does not breach 30,500, or if it does exceed that, do you think, what would you call a bottom if it does exceed 30,500? Does it revise your bottom outlook? Yeah, so if we do get through 30,500 and we hold above that level for a few days and really establish it, then I think at that point you start to say the probabilities highly favor that the low is in at that 15,700 level. So the world I live in is all about probability. That's still a big drop. Still a big drop to 15,700 from where we are. Right, and we remember in the 2018-19 bear market, we actually did dip back down to 3,500 again at some point. I think that was during the COVID collapse. My biggest fear for Bitcoin is not that, it's going to get outlawed. That's not really an issue for me anymore. It's more that if we do see the declines in the equity markets that I expect, if we're looking at 20, 30, 40% downside potentially over the next 12, 18 months in the stock market, how does Bitcoin, which still is being traded as a risk asset 80% of the time, how does that hold up against that? If you see panic, and we saw this yesterday, we saw the stock market declining back down after a gap up on those Microsoft earnings, and Bitcoin was up big early in the day and then gave it all back by the end of the day. So that's my fear, is that if you're going to tell me that the S&P is down 30% in the next 12 months, how is Bitcoin not down on that and potentially down significantly?